Today we will be looking at second part of goods and services tax. Once you're registered for GST, you need to add GST to your prices, issue tax invoices to your customers, keep receipts and invoices to claim back GST on business expenses, submit business activity statements to the Australian Taxation Office, and pay any GST due. If you're a GST registered business, you must add GST to your prices. You also need to issue GST invoices to customers so they know the amount of GST being added to the bill and the total cost. You need to put your prices up by 10%. For example, your service fee is $100, you need to multiply by 1.1 and you will get $110 GST inclusive price. A tax invoice tells a customer how much GST they paid on a purchase. It's important information because some of your customers may be able to claim that tax back. If you're GST registered, you must issue a GST invoice on request. GST registered businesses can claim back the GST they pay on business expenses. You can claim GST back when you've purchased goods or services for your business. These are called input tax credits. When you buy something for your business, you're usually charged GST. If you're registered for GST, you can claim that back. You do this by claiming a GST tax credit when lodging your business activity statement. The Australian Taxation Office will balance those credits against the GST you owe when working out your refund or bill. When expenses are split between business and home. If you bought something for both your business and for private use, you can claim a GST credit for the business portion. When you're not collecting any GST, you can claim back GST on supplies even if the end product or service that you sell is GST free. For example, you are a medical provider. When submitting a business activity statement, which includes the GST return, most businesses must account for all of their purchases and sales. You work out GST by comparing the amount you paid on purchases to the amount you collected on sales. You may need to make adjustments for assets, such as a car or computer, that are shared between your business and family. Firstly, work out the GST paid on your business purchases. Secondly, work out the GST collected on sales. Thirdly, take away the GST on sales from GST on purchases. As a GST registered business, you'll need to let the government know how much you've collected and how much you've paid. You do this by completing a business activity statement. You'll need a record of how much GST you collected on sales, and how much was paid on purchases. You don't need to submit tax invoices or receipts when you lodge your GST return, but you must retain them in case of an audit. A business activity statement is a form that you fill out between 1 and 12 times a year, depending on your business size. The Australian Taxation Office uses the information on your business activity statement to work out your GST refund or bill. It's also used for business income tax, if you're in the pay-as-you-go system, employee income tax, fringe benefits tax, luxury car tax, wine equalisation tax, and fuel tax credits. You'll need a record of how much GST you collected on sales, and how much was paid on purchases. Because your business activity statement may also be used for other tax reasons, you will probably need to provide extra information about your business, its income, and any employees. You can lodge your business activity statement online via your online accounting software, through your MyGov account if you're a sole trader, through the Australian Taxation Office's online business portal, or by having a registered tax or business activity statement agent, generally an accountant or bookkeeper, will submit it for you. How often you complete a business activity statement and when you must submit it depends on how much business you're doing, and that's measured by your annual turnover. More than $20 million annual turnover. Lodge, monthly. Deadlines, you must submit a BAS within 21 days of the month closing. Less than $20 million annual turnover. Lodge, quarterly. Deadlines. Quarter 1, July to September, VAT is due on the 28th of October. Quarter 2, October to December, is due on the 28th of February. Quarter 3, January to March, is due on the 28th of April. Quarter 4, April to June, is due on the 28th of July. If your turnover is less than $10 million, you may be able to lodge annually, but you're still required to pay a quarterly installment of the GST you owe. Less than $75,000 annual turnover, or $150,000 for non-profits. Lodge annually. Deadline: submit with income tax return. If you need any further assistance on good and service tax, please feel free to contact Australian Tax Clinics or Australia Taxation Office. Thank you for watching our video.